Unfortunately, and I'm sorry. I know people love Bitcoin, and I understand that. But where if you want crypto to really get hold and grow, and Bitcoin's market cap to go to 5 billion, 10 billion, or 10 trillion, excuse me, you need to see Amazon. So the way I look at it is after this Netflix report where it got clobbered down 37%, the market is really nervous about these reports, especially when you have these trillion-dollar companies where if they were to drop like that, I mean, it could crash the market, right? So the market is very on edge as we get into these reports. Initially, we saw, so Google sold off, or Alphabet sold off sharply on earnings. We then saw Microsoft initially go up, then go down. The markets were getting crushed after hours here. And then Microsoft came back and is now up nicely. So it's kind of saving the after hours here. Who knows what happens tomorrow? But the one thing I've been telling people is like, we had all the way through Thursday here in the US, the Thursday market close when we have Apple and Amazon, it's like a minefield. So the market is trying to tiptoe around these earnings and figure out, can we stay involved? Can we stay long the market when you have these reports coming out? And any one of them could blow up and create a big market sell-off. So it is wild right now. And that's not, I didn't even mention the Federal Reserve next week is potentially raising interest rates by 50 basis points. If you're looking for safety, I really think gold is the place to be right now. Silver, platinum, maybe a little bit, but gold is really the safest play because it's not really an industrial metal either. So it's purely a play for safety, a play for inflation hedging, which is really the safest place in this environment. We know Bitcoin's still going down. We know that stocks are going down. We know that there's lots of other issues out there. So I do think that skewing it more towards the metals is the right move right now. Now, that's not to say there's not opportunity, right? So you look at a stock like Netflix, which is now trading at about an 18 or 17 PE ratio. I never thought I'd see the day, frankly, when that was the case, but here we are. And, you look at how oversold it is. And so there are opportunities if you're a little shorter term, if you want to hold it for maybe a month or two, where I do think you'll get a 10, 15, 20% bounce. Same thing maybe for Meta, which is Facebook. The stock is just getting rocked in the after hours today. It was at $175 a share, and that's down from 380, wow, not that long ago. So, I mean, there are quality names which are getting in the value range, but I strongly encourage people to not think about these as long-term holds yet, because I still think the Fed is going to continue to tighten. I still think eventually they're going to cause a recession. And I think these stocks will bounce, but then likely eventually head back and go lower. Buy quality stocks, the ones we've always heard about, the Netflix, the Facebook, these type of plays down in these low levels, very near the lows, and then just kind of look for that big bounce, which should come in the not too distant future. In fact, the stock market and some of these tech stocks are hitting some major technical supports in this range. But again, I do worry that it's just a shorter term bounce. So if you're someone who doesn't really look at the market on a daily basis, you may just want to sit in gold or some commodities, or even just sit on the sidelines. Nothing wrong with being in cash and being ready to jump on a great opportunity when it comes up. We do know that, and again, last time we talked, we know that gold had broken out and it went to about the double top, right? So I'll draw in some trend lines so we're all on the same page. If we take a trend line right here, this was your initial breakout, right? And remember, Kerry, we talked about how the price action in gold from 2018 to 2020 mirrored 1973 to 1975, then 2020 to 2022 was 75 to 77. And now we're beginning that breakout that back in the 70s took gold up a massive amount. So you can see the breakout here, right? And what you did was you went right up to the technical resistance, which was double top. So this is exactly behaving how gold should in terms of charting. Double top resistance right here, price has to come back in. Now, generally what you see what's called a retrace to the scene of the breakout. And this trend line is that scene. So I'm still expecting gold to come in just a little bit more over the next couple of weeks, and then you're going to get your best buying opportunity. All right. Now, by the way, if you're someone who is going to hold gold for a year, 5 years, 10 years, it doesn't matter whether it falls $50 here or not, right? The bottom line is, I think anything 1850 down to 1825, huge buying opportunity, and then you're going to see the next big move up. And that move should take us easily through this double top high of around 2070 and probably take us towards that $2,500 level, which I still have a target on for the end of this year. It's the one place where in this market environment, I feel like I could go to sleep and sleep relatively well. If I'm in Bitcoin, I don't know if overnight it's going to drop 10%. If I'm in stocks, who knows what's going to happen tomorrow? Is it going to be a Tesla where it's down 12%? NASDAQ today was down over 3.5% alone. After hours, it was at one point down another 2%, bounced back from that point. But again, gold is definitely the safe haven. It doesn't move that crazy. And I think there's a lot of upside coming in the remainder of this year.
As always, we're going to do a little chat on Bitcoin because he is Mr. Bear, ladies and gentlemen, when it comes to Bitcoin.
Short term only, though, remember.
Mr. Bear is in the house. Let's have a look at what you think about Bitcoin.
All right. So number one, yes, the chart, one of the things to remember is that as a good investor or trader, you never want to be emotionally biased, right? So when I say I'm bearish in this next 3 to 6 months, it's because the chart is telling me that there's a formation where probabilities favor that. And that formation, simply put, is what we call a bear flag. You have the big drop from 69,000, and then you see this tight range that it's been trading in. That's known as a bear flag. And usually if you looked at 100 of these charts with this same formation, about 80 of them would break to the downside like this. So that's where the bearish stance comes from. I will say that I'm a big believer in Bitcoin and blockchain technology. So I think that after we see a flush out and after we get kind of a .com reckoning for the crypto space, I do think Bitcoin is off to the races and does become that digitalized gold that everyone hopes it does become. So yes, Bitcoin, interestingly enough, it trades exactly like a tech stock. The best example of that was yesterday. The NASDAQ initially was down and Bitcoin was down. Then the NASDAQ reversed and Bitcoin went green. Today, the NASDAQ got smoked and Bitcoin also got smoked. So it's trading along the lines of the NASDAQ. So interestingly enough, if you're looking at the NASDAQ and you think it's going to go lower, then it means that Bitcoin likely would as well. Now, the big break is going to come if this trend line here gets taken out. So if you get below, I would say like 37,500 and it stays there, that's where you probably get the next leg down. Short-term support, you're going to have at 33,000. Which is that former low from just a few months ago from January. And then if it takes that out, the next spot is going to be around 29 to 30,000, which was the low from 2021. Now, the only thing I want to say is that you'll get bounces at these levels, but I do have a target of 20 or sub 20,000 on Bitcoin. Unfortunately, and I'm sorry, I know people love Bitcoin and I understand that. But again, if you think about what happened in the .coms, Amazon was $112 at its peak in the .coms. It went to $6. We saw a lot of the .coms go out of business. I do think the crypto space, there's 19,000 cryptocurrencies out there. I don't know how all those survive. They need to be flushed out. Yeah. And I think you have to think it in a Darwinian kind of thought process, where if you want crypto to really get hold and grow and Bitcoin's market cap to go to 5 billion, 10 billion, or 10 trillion, you need to see a lot of these other cryptos get out of their way. And same thing for Ethereum, Solana, the big players are probably the ones that will survive, but you have to have that healthy washout. Unfortunately, in a healthy washout, just like Amazon in 2000, it's going to create a drop in Bitcoin as well. According to everything I see, Bitcoin is here to stay. I think in 20, 30 years, we will still be talking about Bitcoin. The only difference is it's going to be 500,000, a million, it'll be much, much higher at that point. It's just, these are just the short-term cycles in the market, right? I mean, if you look at 2017, Bitcoin dropped from 20,000 to 3,000. If you look at 2013, it went from like 1,300 down to like 200 or 100. It's just the nature of the beast is that it's a very volatile asset still because it's relatively new. I always like to tell people that, it started in 2009 and it's 2022. So it's a 13-year-old, right? And whether you have kids or you don't, or you were a 13, we know how emotional we were and how kind of out of the world we were. So you just have to kind of, it's going to behave like this. If you have your bias for the long term, just hold on. Otherwise trade it accordingly.